Good evening, this is Nick Goodman from VolumeProfileTrader.com on Monday, May 14th, and got kind of what we were looking for in the market today, a continuation to the downside. So that's, I guess, good news in terms of our thesis is right of the market. We are probably, as the market continues to drift lower, we probably get closer and closer to some type of bounce. I'm looking at this 1308 level. It's the point of control for the year, which continues to shift around just because of this past volume. It's going to interfere some. If you want to look at it on like a 9-month chart to avoid that, then you can see we're falling out of bed from this high volume, and it could be down to, first this 13, just like the other level, 1308. It's the next level of any significant volume. But from there it's down to 1262. But I'm going to go ahead and stick with a 1-year chart. So really I'm looking down towards 13, let's call it 1300 for where you want to be looking for to buy and put money to work in the S&P, or I should say the markets in general. So just keep that in mind. The Dow, did it make a new low relative? Yes, it did, barely. Made a new low relative to back on the 10th of April. So we'll see if these levels hold and we get a bounce here, or if it continues to the downside. There is a lot of volume up here relative to any other level the past year. You can see 12,900, that 13,000 level on the Dow. Even volume has picked up on the Dow relative to this entire rally over the past 6 or 7 days. So that's something to be aware of, and obviously you see the selling pressure, but just don't take that off your radar. NASDAQ 100, now we made a new low today, but generally speaking on the NASDAQ we're still in this range. Yes, as of right now, let's say the middle end of this range, it's probably going to be some type of resistance. We'll have to wait and see, but the fact that it didn't make a crisp new low like the S&P is at least shows you some type of relative strength. The dollar continues to move higher. If you remember, I think it was back when the dollar was around here. I was buying the way I was playing it actually. UUP, going long those shares, that is up marginally, maybe 2% right now, so barely anything. But then the way to play that to increase the volatility is I'm short the euro through EUO, which is the inverse, and that position is up nicely. I have to say I bought that on the lows of the euro back, I should say the swing high of the euro back on the 1st of May, and have been riding that since. So that's a nice 6% winner or so, and that is a position that I will continue to hold until probably the euro pushes down to, we're getting into a mini high volume area here, so we'll have to see how it reacts there. But that's generally the level I'm looking to take profits in. Alright, crude oil. Let me get rid of all these lines. Alright, what I'm looking on crude oil is this 92.50 level or so, the swing low back in December. I think that level matters. I'm looking for a bounce there. What I'd be looking to do, and I think I said this in last night's video, is going to USO, going to whatever the at-the-money strike is. So, for example, if it bottoms today, I should say bottoms tomorrow, not today, you'd be looking at, either the 35 or the 36, and then selling the 37 strike call against it. So you buy the 35 or 36, whichever you choose, and you sell the 37 against it. And hopefully the risk reward is a 2-to-1 or so. And if it's 1-to-1, that's fine. Just manage your risk on that downside, so you're not taking a full stop, because I don't think that's necessary. But I don't think that you give that position, you go to the front month and you let it do what it's going to do. Once it hits that 37 level on oil, that would be around 98, 99. That's when you take the position off. You say thank you to the market, and you move on. That would be a short-term reversal trade that you'd be looking to put on if it comes your way. Similarly, natural gas, we have the point of control for the year. Natural gas fell against that so far. It had a high today of 252, closed nearly on the lows around 241.9. And if you want to take a bearish position on that, and you don't trade futures, which not a lot of people do, and that's okay. Go to UNG, and let's see, 1732. Well, let's see. Okay, 1732. I would go to the 17 strike, buy the front month 17 put. Let's say 95 cents. It's 94 by 98. That's where it closed. And then you can sell the 16 strike against it for 53 cents. So you're paying, let's say, 40 cents for a bearish bet to the downside. The max you can make is 60 cents. But at the same time, this UNG position, you have your risk very well defined. You don't want it going back above these swing highs. And if it does, you take off the position, probably for maybe you can buy it back for about 10 cents or so. That means you ultimately risked about 2-to-1. You risked 30 cents to make 60. So just pointing that out as a trading idea. So since I'm in a defensive position right now, I'm going to go through the Dow 30. So let's look at the Dow at the bottom end of the range, and could be a bit toppy. As far as the volume, it's increasing. We could see more downside, but I want to say stay on the defense. So let's go through. Pepsi, that worked today. That made a new intraday high today relative to what it's been at, I think, for the year. Let's see. Since 2012, that is. Yeah, it made a new 2012 high. I think this will continue to work. If it's working on a bad tape, imagine what it's going to try to do on a good tape. So this is something that I think you can still buy right here, right now. I added to my position today. I still think it will continue to work. Disney made a 52-week high on earnings the other day. Now we're just consolidating. It's not really doing much, but it continues to move higher. And if you think that it can continue to move higher, and you like Disney, then this is something that you want to be looking at. I don't have a position in this, so I don't have a real opinion other than it's strong and it's making a 52-week high when everything else is falling off. Intel, the reason I'm mentioning this is this 26, let's call it 27 level. This is going to be the point of control pretty soon for the year. I would be using that as a reference. I think that you can look to get in these levels. Your stop would have to be below 26.30 or so, 26.35, and then we're going to be looking for a bounce or continuation to the upside. This is something that I think you look to sell calls against. Okay, moving on. Johnson & Johnson back down to the value area low. These levels that, where it's been right to be a buyer. We've had a huge flush in volume. Don't take this off your radar. Look for some type of turnaround. If we get it, I think this is something that you want to be buying for longer term. I know it's been this chart's horrible, but at the same time, you've always had an opportunity to sell around basically above 66, and this slow mover, it pays a decent dividend, and you can park your money here while the market tries to figure itself out. That's kind of what I'm doing, and that's kind of what I'm suggesting you to do or look at doing and see if it works for you. Kraft coming in for a landing. One thing I'm worried about Kraft is we traded sideways, then traded lower, and then made a new 52-week high. That's kind of, it's not that it's unusual, but it may mean maybe a blow off top, something like that. But the fact that we do have a lot of volume here, and we're not really going down on Kraft, I think that you can look to get involved on Kraft if we start to trade above this 39.30 level or so. Indicates that the buyers are still in control and you're looking for a continuation to the upside. McDonald's, remember I mentioned this on, the 8th? Even if you went out and bought it on the 9th, the trade that I suggested was disqualified. The trade was a bounce off the 200-day moving average. And the reason why was because the last time we got to the 200-day moving average, we had an amazing bounce and a continuation to the upside. This time is not that time. And now I'm looking for more downside on McDonald's. At the same time, I'm looking at basically between 90 and 86 as a potential level to get involved in McDonald's. I'm going to wait for McDonald's to tell me, or I should say, the McDonald's stock to tell me that it's done going down and I can start putting money to work in this name. But I do like, this is the same name that was basically, let me zoom back out, indestructible through any type of market correction that we've had. And now, we have some type of blow off top longer term, but it's coming in for a landing and it's going to give us an opportunity again. This is a name that doesn't go to zero. There's going to be value in it once everyone's done taking profits. Just wait for that to happen and then you'll get your opportunity. Merck, I was unsure if I wanted to show this, but given the relative strength of the market and where Merck is trading at, I figured I would. So, basically where it's been right to be a buyer every time on Merck, we have seen a pretty nice bounce today. Now, the only problem is you have point of control for the year. At this 38.40 level, we had a little bit of selling into that today. So, I wouldn't necessarily rush in and buy this. I tried to buy it a couple weeks ago. I got stopped out. Too bad, so sad. That's trading. Not going to win everyone, but the goal is to keep your losses small and let your winners ride. Right now, Merck, what you're at is a low risk opportunity where it's been right to be a buyer, but you do have, remember, every time in this balance range, let me get the right tool. From where Merck closed at today, 38.21 or so. This entire group of people, just from 2012, they're all losers if they bought in this range. And if they think the market's going to continue lower, what are they going to try to do? They're going to try to get as close to a break even on that trade as they can. So be careful. Don't be buying the shares that they're trying to sell you. And so what I would do is, if we get a nice bounce in the Dow, and we get back above 38.50 point of control for the year, then I think, fine, take a shot at it and look for more upside. But at the same time, you need to be aware of what's going on and realize the fact that this could be some type of double top and we could be rolling over. It's just that potential. I'm just pointing it out there. Pfizer, now this is a name that I don't mind holding. You have so much volume underneath current price that I think you'd get a bounce regardless. And the only thing that you would want to be concerned about is if it really starts to break below the 50, below 21.5 or so, then you would have to look at, okay, maybe Pfizer has moved down to 20 or so. And if that's the case, then you probably don't want to be holding a lot, just because this is a slow mover. It would take a while to recapture those gains. There's no reason to take a big loss. Rather just, I'm looking for a place to capture some yield over the next coming months while the market's not giving longer term market players, like generally speaking, people who are watching this video, say 1 month, 2 month, 3 month, even 6 to 8 months, whatever the case may be, longer than a day or two. This current market is not for the longer term player. It's for the short term day trader. And guess what? My strategy has completely shifted to day trading, and that's just how it goes right now. And I have to be honest and say it's hard to pick out stocks right now that could be working. That's why I'm going to defensive, trying to stick with a theme where people are going to park their money when the going gets tough. Procter and Gamble. Now this is a little troubling. I recommended it back on either the 30th or the 1st. I know I'm a little underwater on this position, not by much, maybe 30 cents or so, if that. But if you want to keep your stop below these lows, that's fine. There's nothing wrong with that. Remember though, you're generally speaking, let me zoom out a little more. This, not where we're trading now, but this Procter and Gamble, I'm going to zoom out even a little more. Okay. We have longer term a slight upward bias on Procter and Gamble. Is this where you want to be a buyer or seller on Procter and Gamble? It's hard to say seller, so I would have to say buyer. We're even at the point of control for the last 5 years or 3 years, whatever it is. So that's something to be aware of. But I think that this is just a name that you can kind of hold and look away from and see, collect a little bit of a dividend, sell some calls against your position, try to capture some yield over the next couple of months, and see where it goes from there. All right, the last name, Travelers. If you remember, I recommended this name back. I don't know, in this area. I don't remember what the date was. We had a nice breakout. It happened to break out and continue going. Now we're trading in a box. This is kind of looks like Disney in terms of strength, making 52-week highs. Just don't take it off your radar. On any type of weakness, this is probably something that you want to be accumulating. So, really, what I'm most comfortable with telling you trade-wise is I think the UNG trade's pretty good, and I think the oil trade is pretty good. So they're kind of a counterbalance trade. If both works out, then you make a nice amount of money. If not, one works out, one doesn't. Maybe you scratch, maybe you pick one of the two, maybe you don't pick any. They're just, an idea, and maybe you can formulate your own trade off of it. Maybe you want to do a calendar spread on USO, I don't know. But just telling you, the market's not for traders looking to go long. If you've been short the market, obviously you've been profitable. If you've been day trading the market, you should be profitable. The volatility's been there, so that's good. And if you've been trying to buy the market on every dip, which means every day it's been down, that's not been a profitable strategy. It's been a painful one. And I've done that before. I know what it feels like, and it's not fun. So unless if your time frame is outside of the next 3 months or so, then you need to understand what the market's doing. The market's in profit-taking mode, and you don't want to step in front of that right now. The sellers are too powerful. That's why the market continues to move lower, and when that stops, it will probably be an opportunity to be a buyer again. So take care. Have a good night. I hope this helps. I hope it gives you some type of idea or two to do in the market, but have a good night.